Welcome back, everyone, to the PM stream here at Sin City Crypto. My name is David. I'll be your host for today. Yesterday was a when it comes to charting, fairly easy day yesterday, right? We watched this chart on BTC on the 1 hour. We'll watch it on multiple time frames, but we started off on the daily. We found a bear flag forming on BTC. We had some confluence here. We had confluence on this key support level. And I believe this was also, we went to the lower time frames. Yep, right there. This is also a key volume node where around 14,000 Bitcoin was traded. And if I remove this, you'll see the dotted line signify that there was also a liquidity grab here. And so we had confluence there. We were coming into the top end, at least on the daily, of our bear flag pattern, and we expected a breakdown, and we did get a breakdown. So those of you that took that trade, congratulations. Hopefully you either closed out your trade or at least took some off the table and made some money. I know we did over here. So shout out to you guys for following along. But on the 1 hour now, that key 81.4 level, which again, we have that large volume node, is proving to be resistance. And so from a structural standpoint for BTC, obviously we all know it's in a downtrend, but we want to see what happens at this level, and it looks like we are getting rejected. We're currently sitting at 81.1 for BTC, and this is on the lower time frame. This is the 50-minute. You know, I was watching Lifer stream. Shout out to Crypto Lifer, and he had a 3-minute, 33-minute, and a 33-hour or whatever. So I figured, I'm gonna bite that off a little bit. So Lifer, if you're watching, I'm kind of following your lead here. I did a 21-minute and a 21-hour. Why? Well, 21, blackjack, Las Vegas, jackpot, we win. That's what we do here. And then so on the 21-minute here for BTC, again, getting rejected here. And so we throw this on really quick. Someone yesterday in the comments said, you make too many noises. You need to only speak from your mouth. And so I'll try to watch my spit swallowing or anything like that. And so if you're back here watching, I got you, man. I got you. I'll do my best for you. Okay, my friend. But anyways, kind of a boring day in the markets today. We know the NASDAQ last time I checked, had a pretty crappy day, down 2% on the day for the NASDAQ. We kind of talked about what's happening with the IXIC on the daily. We broke below this trend line that going all the way back to 2022, this trend line is held as a very key level of support with really only 2 deviations outside of it. And I'll throw off this volume indicator, right? We essentially had 2 deviations below our trend line where we actually price closed below, but we got an immediate rebound and we came back to retest, and it was just a slow grind up. And so we broke below this trend line, and we talked about this, so I'm not going to hammer this home, but we came back for a retest and failed. But the more important thing for me is breaking below this 200-day moving average is not a good look for the NASDAQ. And so that has kind of been carrying. Now, the NASDAQ having a 3% or a 2% day in the red, I would expect Bitcoin to be under $81,000. But in fact, Bitcoin is trading over $81,000. Which kind of goes to my thesis of Bitcoin and crypto is way closer to a bottom than the NASDAQ and the S&P 500. So although in the next few weeks, I do expect some more bleeding in the traditional markets, I think Bitcoin is going to have a lot less volatility. I think we do get another visit down to that 78K level, which was where we had a massive volume node. This is on the daily, by the way. Let's get rid of this 200-day bands. Let's throw this on and let's zoom in to the 12-hour. And so 78,128, from a standpoint of volume, is a very key level, around 37,000 BTC. We also have our value area here. This top end of that is around 76.9, which on the way back up on this high time frame, we saw Bitcoin consolidate in this region before eventually launching up to that initial high of around $107,000. And so I do expect us to come back and retest this zone. Anything below, though, would be very bearish on the higher time frame. We can zoom into the daily and kind of see the same thing. We zoom into the weekly for BTC. Now, again, this would be completely fine. And actually, what we're seeing here, let's get rid of these. What we're seeing here on BTC, now there's still 3 days left for this weekly candle to close, but this would be the first signs of life as far as reversing, whether this ends up being a doji candle, right, where that spread between the open and the close begins to shrink, which essentially means it literally closed where it opened, we're closed where it opened. A lot of volatility to the upside. We got to push up to 84.6, and we had a lot of volatility to the downside. We were pushed into that value area of 76,652. But if we can keep this structure on this candle on the weekly, we should see a reversal in the trend. Try to take out these levels one by one, or if we get a big announcement, whether it's a nation state or a big sovereign wealth fund accumulating BTC, we could literally blow through just like we did here at around this weekly candle, the week of November 11th, where we took out these key levels. Now, of course, we didn't know these levels would be key, but we created some gaps, and I bet you if I throw on. Yeah, so at least on the weekly, we the big gap we have here, which we do have some confluence with our value area, which we've already retested again once, is this gap between 73.9 and around $80,000. So we semi-fill this gap. There's a potential possibility we come and fill this gap in its entirety. And the last time price was up here, if you take a look at this weekly candle, this is from Monday, the week of October 28th. So the last week of October heading into November, we had a massive liquidity grab, and that is when price started to push up. So this should be a very pivotal level for BTC. If we do, and I'm not saying we're going to, but if we do get, let me change the color on this one. If we do get another push down, which I actually expect that we get one more big drawdown, one more big push down, and then Bitcoin kind of settles. 73.5 would be that bare bottom level for me. Anything below, if we enter into this range here, this range right here, between, what is that, 61.5 and 72.2, depending on what price action does here, at that point, I'll probably be coming on the stream and saying, maybe 109 was the top. Maybe it was. Maybe all the bullish news in the pipeline, all the nation states and what they're doing, maybe that's going to take another cycle. Maybe this is going to be a pretty shortened bear cycle. I don't know, but we're not there yet. So my mindset now is we're still in a bull market. We're just seeing buying opportunities with these deep retracements for Bitcoin and the rest of the altcoin markets. With that being said, I'm going to pop into the chat here, say hello to some people. If you're new, say what's up. Shout out to all the mods. Also, we got Jay Violet in here, K Diggity. The VV Zombie said, yo, what's up, man? Also, Uncle Jesse, what's going on, brother? LFG Mike. Mike, your almanac should be shipping here over the next either tomorrow or Monday. And so I'm excited for you to get that and check it out. Also, Mario. Al Jr., good evening, everyone. What's up, Al? How you doing, man? I don't think I've seen you in here. Also, Vic Shoots, and my favorite, Government Bowel Movement Tracker. Shout out to you. I'm also going to talk a little bit about ETH today. I think ETH is... Everything tells me that Ethereum is... Like, there's not much lower ETH can go, right? Obviously, practically speaking, sure. It could go a lot lower, $1,200 to $1,500. Does it get to its bear market low? Can ETH really get down to its bear market low from 2022 of $875? I don't think so. Now, this is one of the uglier charts in all of crypto. And we'll get rid of all these and we'll take a look at this. But I want to share some on-chain metrics with you as well. We'll take a look at the ETH dominance. And I was in the Frankie Candles chat earlier, and I super chat him. I said, what's your price of ETH have to get to for you to be like, all right, we're selling the house, babe, you're selling your left kidney, I'm selling my right kidney, and we're going to buy some Ethereum. And he said between $1,500 and $1,600. Now, again, this is ETH on the daily, not good. Also, if you go to the MA ribbon, well below that, we failed an attempted reclaim, got rejected and spilled off. And then the other thing too for ETH, If I throw on the high volume points, what you don't want to see is you had two very important volume, well, actually three very important volume levels, okay? And you see each one of them had a massive liquidity grab the last time price came down here. The big one here is going to be right here at $4.82 million. And that is where ETH saw this kind of insane, this candle, right? And let me get rid of this. I mean, look at this candle. This candle had an open of 2,800, a low of 2,100, and a high of 2,900. And this thing went from an open of $2,870, got all the way down to $2,150, and still closed the day in the green. And then, so it's no surprise to anyone that this was, let me zoom out. Is this our largest volume node that we have on this chart, period? It sure looks like it, right? 4.8 million ETH was traded here, and we gave up that level, right? We gave up that level. That level was around 23, that level was 29.10, and we completely fell through that level. But on a more recent price action, you had this level of 23.53, and I'll drop a horizontal line here. Again, had a massive liquidity grab. We fell completely through, closed multiple candles below, briefly got above and lost it. The next key level, the big one here, was, again, we'll drop a horizontal line on top of this one too, 21.52. Now, this level put up a better fight for Ethereum, and we even attempted to get back above this trend line that I have drawn here. But ultimately, we failed. We failed this level. And as far as volume nodes, and we can zoom into the 2-day, we can zoom into the week. There's really no big volume nodes. And I mean, I can also throw on the VRVP. So a lot of the price action has been happening, at least from a volume standpoint, it's happening above $2,000. And so with ETH sitting at $1,863 is one of the uglier charts, excuse me, in all of crypto for me. When you look at ETH dominance, when you look at ETH versus Bitcoin, when you look at ETH versus literally any other layer one, this is not a sexy play. But, I want to take a look at a couple of charts, okay? So these are going to be all from CryptoQuant. This is, first one I want to look at is this one. Realized priced for accumulation addresses, okay? So the realized price of ETH, as you notice here, the trend, we've only spent 5 days below our realized price band, okay? Now this is the area where there's no one's in the green, no one's really in the red. It's kind of your equilibrium zone, right? And this is the price of ETH, and we officially crossed below it. So anytime we revert outside or have a deviation, we do expect to revert back to the mean, okay? That's the first one. The second one is inflows into accumulation addresses. So addresses that accumulate, and I think the metric here is they hold for over 6 months, you can see an absolutely massive spike here. The largest spike since this indicator here to January of 2017. And so we're seeing what are traders doing? What are the on-chain metrics showing? And addresses that have been accumulating and holding Ethereum, they continue to accumulate and hold Ethereum. And then the other one was the balance. And obviously those two, the one I shared before. But again, this has just gone completely vertical up and to the right. There is some potential bullish catalysts for ETH coming up, like the staking integration into the Ethereum ETFs on Wall Street. I think that's going to be absolutely massive for these ETF issuers to be able to double dip into fees, charge the fees to the client, like a quarter basis point, and then also take that Ethereum that you bought on behalf of your clients with their money, stake it, and then earn essentially a dividend, right? Using words that they would understand, and staking rewards, and earn the money that way as well. We're talking about working capital. There's a reason certain investors don't invest in X, Y, and Z company, and why people continue to invest in companies like Coca-Cola and companies like Microsoft is because they pay dividends. So it's a quarterly revenue. Your money is working for you on top of the appreciation of the stock going up. And so I think that's going to be a game changer for ETH. And maybe what we're seeing from on-chain metrics is people are starting to price that in. It's just the price action. And ever since ETH went to proof of stake, no cap supply, if people ain't using it, it becomes inflationary. We'll take a look at this is from DeFi Llama. ETH's dominance on TVL has been shrinking and is continuing to shrink. I think the largest point we had, this is going back to 2021, ETH had 92% of all TVL across the board, and the number is currently sitting at 51.27. I believe I was looking at this about 30 days ago. We were close to 60, and so across the board, down on TVL, minus 2.2% over the last 1 day, 16.5% drawdown over the last 7 days, and over the last 1 month, 25% contraction in Ethereum TVL. With Berachain being the number one in the top 10, Berachain and Sonic, and Sonic's another one. And then we'll take a look at, well, what really pushed ETH last cycle? A lot of it had to do with NFTs. And so we look at NFTs, ETH still remains number one, and is actually, at least over the last 24 hours, up 30% on volume and when it comes to sales. But over the last 7 days, down 22%. Over the last 30 days, down 51% for Ethereum. I think ETH needs a lot of things to come together we want to talk about utility pushing the price action up and not just speculation, because and nobody wants to speculate on ETH right now. Nobody wants to speculate on ETH. So the money you're seeing flowing in mostly is institutions, mostly is going to be people buying. It's really not retail, right? And so how is that game going to change for ETH? The question I asked Frankie, what is your absolute rock bottom level that you want to buy ETH at? He said $1,500 to $1,600. For me, I'm at 1820. If we zoom into the higher time frame, let's say the 1 hour, you have this absolutely ginormous volume node on the 1 hour where 500,000 ETH was traded, and that is at $1,754. If we can hold $1,754, I mean, you're the immediate level you're expecting a retest, and this is me just here. We'll throw a box up here. The immediate level I'd be looking to test is this level here. And that is between $1,405 to $1,550, which would be pretty nasty. That was last cycle high back in, that was 2 cycles ago high, 2017. That was where ETH peaked at $1,400. And then more recently in August, we broke below, and then we kind of spent a little bit of time in this area. We built some support on top of it. We had some resistance below it, but this area was key. And so if we lose $1,754, we lose that volume node, you're looking at between $1,400 and $1,530. Outside of that, $1,000. And at that point, we really got to have the conversation. And I'm not going to look forward to this on the morning live show with my co-host Robin. Yeah, maybe you're right, man. Maybe ETH really isn't going to come back. I just find that hard to believe with everything happening from the institutional standpoint. So either way, medium risk, medium reward, picking up some ETH at 1864, 1754, as you can see here. This is on the weekly. We did get a wick down here, and that held, so that was pretty good. We zoom into the hourly. Take a look over the last few hours. So obviously, the trend is down. Let's see if we see any divergence here on the RSI. Not really. But we're continuing to make lower lows and lower highs, failing to take out this high at $1,900 and kind of bleeding off. But again, first stop, 1829. Might be worth a shot to enter into a long here if you're looking to trade. This would be a little more risky. But you can see here what price action did. We had a strong rebound on these hourly candles after we closed right at this level here. And again, that's around $1,830. Price grinded up. I think the percentage change here was 3.5%, 4%. Pretty good. But if you get back down here, it's worth the stab at a low leverage entry, long position with a really tight stop loss. If not, you want to talk about throwing the house and maybe getting into a higher leverage play. I $1,754 for ETH. If you want to set it and forget it, go ahead and go whichever platform you use to trade. We use Buy DeFi. We also have a MEXC link in the description and a Hotcoin one in there as well. Go in there and just set a limit order at a little bit above this 1754. So maybe around $1,759, $1,760. If that does get filled, it should be a pretty nice trade setup. And I'd look to target your TP right around $1,829. Assuming we get that spill off, come back and retest, we should see some resistance there. With that being said, I'm checking with the chat. Take a sip of my energy drink. All right. 60K of XLM will keep you in the bathroom for months. Ver Hoofty Flufen said, why is Trump crashing markets? Why is he picking fights with his country's best friend, Canada? Yeah, he's just, dude's got a chainsaw and he's got a blindfold. I was like, oh, who's up there? Canada. All right, perfect. Chainsaw to you. Who's down there? Mexico. Who's over there in Greenland? And we're going to come in and annex your country. So I don't know. A lot of volatility. The markets obviously don't like it. But as soon as that stops, as soon as the positioning stops, as soon as the, excuse my language, dick measuring stops, I think the markets will rebalance and realize they overreacted. You'll see big rallies to the upside. Ozzy said, altcoin season loading. It's going to be a weird altcoin season. You're not going to see the traditional, everything's going to run, blindfold yourself and throw some darts at the wall and you'll make money. I don't think we're going to see that. I think I spoke about this with Kyle from ICP in the morning show. And I said, I really think the next leg up, man, for altcoins is going to be utility coins, projects that actually have the infrastructure in place to do what people are expecting the next big run to look like. RWA, stable coins, gaming, artificial intelligence. Who's got the infrastructure built, ready to go? Because projects are going to launch, the apps are going to build, and you can't build on something that doesn't have the infrastructure in place yet, that can't handle the load, that can't get the transactions, that doesn't have the users, that doesn't have the liquidity, that doesn't have the stable coins. You're not going to get those. So when you look at projects, you look at XRP, you look at Solana, you look at Cardano, you look at XLM, you look at Hedera, you look at AVAX. There's a reason these ones have high valuations and continue to be in the top 25. It's because they have more of a developed ecosystem to where we're no longer in when it happens, it is happening, and it's going to continue to happen at an accelerated rate. And these ones are going to be the ones that get the vast majority of the liquidity and people getting into their ecosystem. And so I think we're going to get a quality run in quality altcoins. And so if your entire portfolio is just sitting in super speculative plays, meme coins, a brand new chain that doesn't have an ecosystem yet, I would look to pivot. I would have a strategy to try to accumulate some of these top projects. We shared some news on Aave today. Aave is one of my favorite plays. When you talk about DeFi, you talk about infrastructure, you can throw Aave into the stablecoin play narrative with their Go token. Now with institutional RWA narrative filling in, and it looks like on the 21 minute, we're seeing, dude, this is a ginormous, this is a massive bear flag here. That pole is huge. No pun intended. $174 to 100. As soon as I say that, my wife walks into the room. Between 172. And so again, just like we saw with BTC and with crypto and altcoins, unless you're going on the super low time frames, you spend time on the 30-minute to the day. The structure of a majority of them all pretty much look the same. And so for Aave, I do expect a breakout below from this bear flag pattern. If we zoom into maybe the 30-minute, the measured move here would be, let's measure the width of the length of the pole, depending on the breakout. You're looking at a move down to around $148. That would be your measured move. If we zoom into the higher time frames, take a look. What do we see here? So we have our discount zone sitting right around $154 to $165. We throw on our MA ribbon, not the MA ribbon. We throw on this, take a look. We're seeing any change in trend or structure for AVE on the 4-hour? No. On the 2-hour? No. Key level here we lost was 166 for AVE, which what was a very, very pivotal. And you take a look, and this is one thing I also like to do when I look at these volume nodes is, what did we see 2-3 candles after? Okay. What do we see in the candle, right? Let's isolate the one candle where we saw that large volume node. What did we see? We saw a nasty wick down and price essentially, not technically, but got close to forming a hammer, which is a reversal candle. And then what did we do? We rallied from this close to the next 2 candle open around 6%. On the way down, we fell right through the level, and the very next 2-hour candle, we attempted to reclaim that high volume node level. Another thing here, you had another liquidity grab right down here. This was yesterday at 10 p.m. Eastern time, and price rallied again. And this time we just fell completely through. And so what that tells me from a psychology standpoint of looking at candle formation, specific candles, a group of candles, indicators, is the bulls have no momentum. Every time they grab, they have a liquidity grab, they step in, they push the price up 3%, and we still make a lower low. We still make a lower high. And so until that structure changes and we see the opposite effect, your best bet to making money in this market is to short the resistance levels. Unless it's like some high time frame, like on Ethereum, for example. I think that was a great example. Ethereum, super high time frame, $1,754, or let's just say $1,500. Then at that point, unless you think the project is dead, and of course there's still going to be some risk, then go ahead and long the support. But for projects like AVE and really the rest of the altcoin markets, in patterns like this, with no momentum for the bulls, with large volume nodes being completely taken out to the downside, not even attempting to stop or reclaim, and failing the ultimate retest, it's just the momentum's on the bear side. And instead of trying to fight the trend to get your, whether it's your confirmation bias or you want to believe it's going up, make money on the way down, short the resistance levels, and then hold on to your spot bag. You're essentially hedging yourself. And so, yeah, other than anything you guys want me to take a look at, please let me know. I'll be more than happy to do so. Make sure to hit the like button. Giga said, like the video if you're wearing socks. Fair enough. How do you feel about Stacks? Said Keith Bosher. Keith, Stacks falls into the basket of, let me throw this on here. Stacks falls into that special bucket of altcoins that last cycle, their pitch, wow, oh my God, this is going to be amazing, revolutionary. This cycle, it's not really that amazing, revolutionary, because a lot of projects are doing the same thing. Stacks has always been, it is a play on Bitcoin, smart contracts, DeFi, infrastructure, things that Bitcoin cannot do. Stacks is going to step in and do what Bitcoin can't do. And now you have competitors like ICP, like Cardano, like everyone else that has some sort of interoperability or function built out for BTC. And what I'm seeing here on Stacks as well, kind of same idea, and just goes back to what I was saying. You see very similar pattern formations. And this one actually already had its breakout on the 4-hour of bear flags. And again, these things break to the downside about 70-80% of the time, 70 to 75% of the time. And so for me, Stacks, the selling point is just not there. I mean, I still have some. I'm super underwater on it. I think my cost basis was around $1.10 or 90 cents, something like that. So I'm in the red on Stacks. I think we'll get another pump out of this. This one went to the Nakamoto upgrade. The team is cool. I've spoken with a couple of people from the team. Nothing wrong with them. It's just when you're in a fast-moving market and a market that's revolutionizing a space like finance and technology, you got to be quick, man. You got to be quick to pivot. You got to be quick to gain market share when the timing is there. Just like with Near Protocol. When AI agents blew up, and I'm not saying this is the founder's fault or the developer's fault, but Near really had a small window of opportunity to grab some market share there, and it really didn't do so. And so you saw that big spill off, and here's trading at like $2.22. So for me, from a fundamental standpoint, I am not a buyer of stacks. From a technical standpoint, we already had this breakout, so there's no point in trading this now. You know, the other way you could trade this, and this is in hindsight, of course, on the 4-hour, you wait for the break below, okay? Now, you could have entered here at around 61.7 cents for the price of stacks. We did go all the way down around 60 cents. Is that right? It's sub 60 cents. You could have potentially entered into a short on the retest, but it looks like price wants to consolidate, and we can zoom into the hourly, take a look at what price did there. You can see we're potentially forming a cup and handle pattern here on stacks, which would be bullish as long as we don't cross the midline here. If we can stay above 61.1 cents on the way down, creating the handle part of our cup and handle pattern, we should see a break to the upside. And the measured move for that one would be, depending on where we break out, if we break out from here, you're looking at a move back into this flag pattern here at 63.6 cents. But if we get down to this 50 cent or this 50% retracement level, this last high we put in, you're looking at catching resistance right around the bottom end of the bear flag pattern here. And so stacks, from a technical standpoint, not really a trade I'm seeing here on stacks. You got a few things happening on the lower time frames. Let's go to the 21-minute. Lots of indecision. You see lots of wicks to the upside, wicks to the downside, and price is closing where it opened. Now, what you are seeing actually on the lower time frame, and now remember, patterns mean a lot less on lower time frames, is you're seeing a potential bull flag forming here on stacks, to which that measured move to the upside would be around 63.7 cents, again, bringing us back into this pattern. So fundamental, I'm passing. Technical, I'm waiting. Hope that helps answer your question. Hithos Crips, welcome back. I hope you enjoyed your money there, my friend. Nirvana, Wayne C, Slap. Never heard of Slap. You know, I was looking at, there's this one, it was Debt Relief Bot, I think it was, DRB. I bought a little bit on the dip. And I'm not saying you guys should go and buy this. This is super speculative. But this was a token launched by Grok. And this thing is down 56%. Is on the daily. Let's draw some fibs here. And let's see. So we came right down and caught perfect support at our 786 Fibonacci level. So this would have been a great entry if you are into super speculative plays. But this one in my AI group of people that I hang around with that are pretty plugged into the ecosystems across Base, across Solana, across Avalanche, they seem to be pretty bullish on this one. And a lot of people like to fall into the FOMO and buy here, but this is what you want to wait for. You want to wait for a large retracement, whether it's a 618 or a 786 retracement. And if you're bullish on the project, enter there. And so I entered, I think, a little bit above, around a 12.5 million market cap. So I'm expecting it to go to zero. I'll be completely fine if it goes to zero. But this is another one. And I don't know how the hell I got from that to this one. But anyways, looking at this, you know, I posted something on X yesterday. Let's go to X, which, by the way, if you're not following us on X, make sure to do so. And I said, guess the layer one, okay? Guess the layer one, and a lot of people guessed correctly. And the correct guess was Solana. I mean, and I'll show you the interactive chart so you guys can see. Over the last 180 days, your blue line is your transactions, and then your red is how many have failed. And the ratio is insane, okay? The ratio is, you even had a day where more than 50% of transactions completely failed. You're talking about 138 million transactions in a single day, and 70 million of them failed. Now, again, to be fair, no other chain does this amount of transactions, right? You go back, you look at even ETH, okay? You look at even ETH over the last 180 days, a million transactions were successful. But the ratio is what you want to look at, right? So on a peak day of 1.386 million transactions, only 15,000 failed. And then when you go to Solana, it's a lot worse. But then again, like Solana needs Firedancer, okay? And then what I wanted to show you on this one was no, not that one. Oh, that's right. I was like, where was I going with DRB? That's where I was going. But for this one, I was looking at percentage change in transactions, and Stellar Lumens is number one. And you look at XLM, this is also very surprising. Huh. More failed transactions than real ones? That's odd. Anyways, active wallet, active addresses, daily deployments, that is actually going up. And it is number one when it comes to transactions on the network. When you look at active addresses on the network, number one is currently Viction. Never heard of that, but Phantom's another one. Phantom's very, very interesting. And you take a look at the ratio here for failed versus successful transactions. It had that massive spike. This was on January 20th. 500 out of 590,000 transactions, not only, but 80,500 of them failed. And so it was just interesting. But here's what I want to take a look at for Phantom. This is contracts over the last 180 days, and this thing has been going vertical since it got to a bottom in February. And so we talked about Phantom being a sleeper and people watching the price of Phantom. Absolutely. And I say Sonic, but I say Phantom because I'm going to go to the Phantom chart because it has more data in there. But everyone watches Sonic go up to 70 cents, okay? Excuse me. Watches it go up to this local high here, 98 cents a dollar. And everyone was like, oh, I want to get in a Phantom. This thing is moving. I'm too late. And then you get these sort of retracements. And we almost got 100% retracement on the move that started at 38 cents. You almost got 100% retracement for Phantom. And so I believe in Sonic. I believe in Phantom. I believe in Andre Cronje. We are well below our value area here for FTM. If we zoom into the hourly, let's see if we can catch any trends here, any patterns, ways to make money. So you maybe have a little bit of a cup and handle coming in here, right? Cup, handle, potential breakout there for FTM. But some key levels, let's throw on our high volume points here. So 5 million, we're trading at around 40 cents. Let's zoom into the 21 minute. You have another large volume node at around 41.69 cents. You're seeing a bullish harmonic pattern play out here, I believe. And again, this is something I'm actively learning. It's pretty confusing. There's a lot of like fib levels you have to remember, and they almost have to be like perfect. But this to me looks like a bullish pattern. Either way, I'm not going to speak too much on it because I'm not very confident in the harmonic patterns yet. But we are grinding higher, right? You have kind of this curve up here. We are making higher lows. We are also making higher highs. Now keep in mind, this is at a very, very low time frame. And you even have, let's see if we have, I thought we saw a inverse head and shoulders, but we did not because this extended too much. This would have been a nice inverse head and shoulders if we didn't get that drop down there. But this is actually, it looks like at least on the shorter time frame, we're kind of getting a nice rounded bottom, continuing to make lower or higher lows and higher highs across the board on the lower time frame. Let's take a look at the price action concept, seeing if we created any gaps on the way up or the way down. Let me get rid of that. All right, so we did create a gap on the way up, which is between 46.67 and 47.17 cents. We are seeing a bull flag pattern again on Phantom on the 21 minute. And then you see how these gaps, and we talk about gaps all the time. See how this fair value gap got perfectly filled? Okay, almost perfectly filled, right? Bam, right there. We're off by like 1/100th of a penny. But these gaps do tend to get filled. And so you can always use these gaps as if you're unsure about where to put your take profit, if you're trying to push, move this thing to the upside, or if you're trying to figure out where to set your stop loss. Gaps are always a great space. You work with gaps, you work with volume nodes, you work with measured moves, you work with previous big levels of support and resistance, and then you work your way that way. But this one, as long as we don't, let me draw the fib on this one here. As long as we don't get below this 50% level on the fibs at 47.75, this bull flag pattern is still intact, and we'd expect a breakout to the upside, and potentially trying to take out this last high we had at around 49 cents. If we do, we can zoom into the 1 hour. If we do take out this 49-cent level, the obvious next level here, my friends, is going to be the top end of where this is actually a really nice cup and handle pattern here. Let's get rid of this on a little bit of a higher time frame. Yeah, this is when the drop started, right? Here we got our cup that our handle that extended. That extended to our 382 level. We almost got a wick down to our 50% retracement level, which is what you want to see. Anything below 50%, if you retrace more than 50% of the initial move up in a cup and handle pattern, to me, it is invalidated. Some people like to look at the 618. Cool. For me, if we get below 50% retracement from the initial move up from the bottom of our cup, to me, that's invalidated. But you see, we're looking to break out on the 1 hour. We're just catching a lot of resistance right at 48.42 cents. And so with that being said, let's throw on this here. Let's work our way up. So we see historical volume. This is going here at around 49.32 cents. So this zone is where I would expect Phantom/Sonic to get rejected again. Now this would potentially be a nice short play here, but you never know if this thing is actually breaking out. You might get something like a rejection. Price comes back up. We see rejection. We see a little bit of consolidation in the zone, and then we see a big breakout, or we see a breakout come back to retest, and then that move would be a lot stronger if we do get that retest of that 49.32 cent level. And so for me, Phantom, from a technical standpoint, I want to wait to see what we do between 49.4 and 49.32 cents. Excuse me, 49 and 49.32 cents. If we can break into this area here, I know it's a pretty tiny area. If we can break into the zone here, okay? I want to see what price does there. Do we accumulate? Do we get completely rejected and fall down? If we do, we're looking to catch some support right around 48.14 cents. What you're also seeing on the 2 hour here is a bearish candle forming. This is a shooting star or a hammer at the top of an uptrend, which signifies a potential reversal to the downside. So there's a lot of things at play here. So technical standpoint, this is for me a wait and see what happens between 49 and 49.32 cents. If we get accumulation, I want to see a breakout above, and I'll enter in on the retest for a long trade to the upside. If we break below, depending on how quick that move is, if I'm able to catch this thing right before it gets to sub 49 cents, I'll be open to entering a short position and writing this thing down to around 47.04 cents. Now, you would need to have a lot higher leverage to make that trade count, or a higher nominal value in terms of the amount of money you put up for your trade. But either way, but from a fundamental standpoint, man, I love Sonic. I think Sonic is, to me, a no-brainer. All right, take a look at Nosana. Maybe we'll look at Nosana. Ricardo said they are preparing the market for a dump. Who's preparing the market for a dump? Tell me virtuals will make an all-time high. I talked about this yesterday. I think it will. Here, you can take a look at what I'm looking at. High time frame. I mean, you've given back everything, right? It's like an ETH chart. You gave back everything on your initial move from 58 cents. So not very good. And from a fundamental standpoint, I want to see what they do with their ACP, their agentic commerce protocol, what their vision is there. But I still think we can get a rally out of virtuals. I'm like 60%. We make a new all-time high. I wouldn't be surprised if we get a rally back up to like $1.50 or maybe $2. And it's got competition, or the AI agent narrative, just no one's really interested in it anymore, which I can't see that. I'm still bullish on AI and AI agents. But virtual is definitely is a little more risky than a few months ago at higher price. I know that sounds crazy, but yeah. So we'll see. But I still have a bag of virtuals. I did adjust my DCA out strategy for virtuals protocol. I am looking to be more aggressive on my laddering out. But again, this is a project that we were talking about at around $1.50, $2. And so we always preach, make sure to take profits. So if you guys got in at that level, and if you took profits on the way up, $4, $4.50, $5, but more importantly, the virtual ecosystem plays, the AI agents, we made a lot of money there as well. As long as you don't forget to take profit, you're going to make money. So yeah. It looks like on the hour, oh no, I don't want that, I don't want this. On the hour, looks like we've officially broken below, or broken out of our rising channel, rising wedge. Usually you do get a retest of these. We didn't quite get there. Will we get another run up to around 60 cents? I think we will. And then that spill off, if we get rejected and we can't get back into this pattern, that spill off, when you look at support, there's really nothing outside of 55 cents. You know, I'm curious. Let me do this, and then let me go to the higher time frame. Yeah, I mean, this purple line, 55.8 cents. We had some consolidation here. This was support. This was resistance, and we finally broke out. But below that, we go back to the 1 hour. You have a pretty large volume node at around 51 cents. And so if you're looking to trade, I would wait for a rejection, look to short this thing back down, take maybe 50% off the table at 55 cents, and then make sure you completely exit your position before we get down here at around 51.8 to 52 cents. Should see a pretty strong bounce there. We saw last time price got down here on a wick, virtuals rallied around 10%. And so, yeah, that's virtual protocol. But from a fundamental standpoint, thesis has changed a little bit. Not enough to panic sell and take a big L, but it's changed enough to not accumulate at these prices. I'm good at buying dips, but need to get better at taking profit. Hey, man, I think that's the hardest thing. And my one piece of advice for you would be the following. Before you even enter into a position, before you even buy anything, have your strategy out before. So if you have your eye on, let's say, Ethereum, okay, you're like, look, I think ETH is undervalued. I'm going to buy the dip here. Before you do anything, sit down, write down the levels you think Ethereum can get to, your best case, your worst case, your base case, and then figure out how you're going to take profits on the way up. If it's a ladder out strategy, 10% here, 20% there, 30% there, or if it's an ROI strategy, when I get back 30%, I'm going to take out 10% of my value or 20% of my value. Have all that in place before. Put that piece of paper somewhere, whether it's on your phone or written down on a piece of paper on your nightstand. I don't really give a shit. Put it somewhere, and as prices hit those levels, you can even set the price alerts on the chart. You can go to TradingView and set alerts at certain prices. If it does, or you can even put in market orders, or excuse me, limit orders on selling your spot bags, whether it's on Coinbase, Kraken, or whatever platform you use. And that way, when price starts running, you don't become euphoric and lose sight of your plan. You already have it in place. No matter what happens, if you want to go back to it every week, every 2 weeks, reanalyze, readjust, but do it in times of consolidation. Don't do it when the market's dropping, and don't do it when the market is rallying, because you will be at your emotional peak. And when you make decisions, when you're at your emotional peak, you're going to lose a lot of money majority of the time. Guys, make sure you are subscribed to the channel. I want to thank every single one of you. Also, big thank you to the mods. Come back for the AM show tomorrow. You know where to find us, right here on YouTube. I love you guys. See you then. Peace.